Welcome back, legends. I'm Dr. Cal. This is going to be a very quick update video. Massive developments on the charts. Even though the video is late, I had to get it out because of the new critical technical setups that are developing right now that I had to share. So apologies for the late upload. Let's get right into it. Not going to waste your time. In this video, the stock market map, red all over the place. All of the entities are down, led by the Russell and the NASDAQ. Typical risk off. Move in the market. All the stock market sectors deep in the red. Futures slightly in the green as of right now. It's 6:35 a.m. Eastern time as of the recording of this video. That is Wednesday morning. I want to start the video with this chart, legends. I have to talk about this chart. Absolutely critical developments on the daily chart for the S&P 500. This is the regular scaling, not my usual logarithmic scaling. Why am I using it this time? Well, because we have this perfectly symmetrical uptrending channel. Perfect support zones that stopped every single sell-off. So far, we're now testing that key support. It also stopped every single rally this year since the October bottom. So what's up with these blue circles? What's up with these vertical green lines? Let's get straight into it. What's happening with the blue circles? These legends identify bullish divergences. A low followed by a lower low on the daily chart, and a low followed by a higher low on the RSI. Same thing here. Low, lower low, low, higher low, bullish diversions. Lower low, higher low, bullish diversions. Lower low, higher low, bullish diversions. What's happening right now? Exact same setup, low, bullish diversions. That's number one. By the way, legends, this is a specific setting in the RSI. If you watch the daily RSI, it does not look anything like this. This is a specific Money Time Machine setting that I'm going to share with you totally for free. Check this out, legends. Click on the settings for your RSI. Go into time frame, change it to 2 hours. So this is the 2-hour RSI. Why am I using it? Well, because it's been absolutely incredible. Absolutely incredible. Let me show you another example that's right there on the chart. If you can notice it, here it is, lower low versus this low on a closing basis. What does the RSI tell us? Higher low that called the bottom on a closing basis perfectly. That was the bottom. The market continued higher. Okay, so what's going on with the vertical green lines? Well, I've noticed something else. By the way, legends, this is the stochastic down here. This is a proprietary setting that's available only the Discord community members. The default settings will not look anything like this. Again, this is a back-tested specific setting that I came up with, and it's been the most accurate setting I've ever found in my 10 plus years of trading the market. Okay, what's going on with the stochastic? Well, I've noticed if two things happen, we nearly always get a counter trend rally. What are the two things? Number one, look for a bullish divergence on the 2-hour RSI. That's number one. Number two, look for the stochastic to be oversold. That means a reading below 20. Okay, a reading below 20 on a closing basis. That confirms oversold conditions on the stochastic. So condition number one, bullish divergence on the RSI, 2-hour RSI. Condition number two, oversold on the stochastic. What is the result? Huge, powerful counter trend rally. Okay, powerful counter trend rally. In this example, legends, we have the bullish divergence and the oversold condition, but no counter trend rally. It actually marked the bottom, and we had a huge rally after that. Okay, what about the September bottom of 2022? Bullish divergence, double bottom, higher low on the RSI, lower low on the daily chart. Oversold conditions. We had a beautiful counter trend rally, significant counter rally. Okay, what about early September? Same thing, legends, consecutive lower lows, consecutive higher lows on the RSI, oversold conditions, powerful counter trend rally. What about the June bottom? Same exact thing, continuous lower lows, higher lows on the RSI, powerful rally. I would not call this a counter rally. This was a major bottom, so I would call this a rally. We had several other rallies follow that, but that was a major bottom. Okay, let's look at the May bottom. Do we have the same conditions? Let's look at a counter trend rally with the RSI. No bullish divergence in this example on the RSI. Stochastic is oversold, but no bullish divergence on the RSI here ahead of the counter trend rally. However, there's a sizable bullish divergence if we measure the bottoms from the low before the counter rally and after the counter rally. This was another bottom and we had a huge rally follow that. Why am I harping about this? Well, legends, we have consecutive lower lows, higher lows on the RSI, stochastic entering oversold conditions in 1 to 2 trading sessions. That's it. 1 to 2 trading sessions will have the stochastic in oversold conditions. The RSI bullish divergence will likely continue. If that happens, we'll have a buy signal as early as today or tomorrow. Okay, that's number one. Bullish divergence on the RSI, consecutive lower lows, stochastic entering oversold territory. In addition to that, we're only pennies away from tagging this major support line in this ascending channel. The market is still in an uptrend that started in October of last year. We're still in that uptrend. Okay, so we have support from the oversold conditions, the bullish divergence on the RSI, and the uptrend. We also have support from this little cluster of demand. The bottom of this cluster of demand is around 425.8. That's pretty much where we closed yesterday. So I'm still expecting buyers to step in at these lows. Eventually, I expect this gap at 422 to get filled and to move even lower to 418. That's my ultimate low by the end of October. For the end of September, we've already hit our target of 425. If you remember, legends, I downgraded the target from 430 to 425 as soon as we saw this counter rally fail. This counter trend rally failed immediately. We expected a test at least of the bottom of the gap at 447. When that failed, we knew that bearish conditions were significantly worse than expectations. The market topped at 444, and as a result, we downgraded the target by the end of September to 425. We hit that target yesterday. Again, we have this key support line coming in. We will likely tag it today, and the market will almost certainly form a tradable bottom this week by Friday. We also have this major bullish divergence on the PPO RSI. This is the 1 hour chart on the SPY. Still major bullish divergences, convergence of this key cluster here, the gap down below here as well, the ascending support line, the trend line, the bullish divergence on the momentum indicators, and we're also forming what? What does this look like to you, legends? This is a falling wedge. A falling wedge is a bullish bottoming structure. These falling wedges triggered by signals as soon as resistance is broken. This resistance line, as soon as that is broken, we will almost certainly break it today. If anything, if we just move sideways, we will break this resistance line. As soon as this resistance line is broken, this produces a buy signal with a target all the way back to the neckline of this cluster of trading. So this neckline right here. Bears will be waiting for the market back here. They will try to short the market again here in this range between 432 and 435.5. We also have a descending 5-day moving average that will act as resistance. This gray moving average is the 5-day moving average, and it will act as resistance. Major resistance that will likely stop the counter trend rally is this level, the breakdown level exactly at 439.9. This is where I expect the counter rally to eventually fail and for the market to continue lower by the end of October. So we're now looking, legends, for a short-term bottom developing here in the next 3 trading sessions, a sizable short squeeze rally all the way to 439 by the first week of October, roughly at the end of the first week of October, then continued selling, a continuation of the crash sequence all the way down to 418, this key support level that acted as resistance here, resistance here, resistance here. It will now act as support. We also have the 200-day moving average that is still ascending that will also act as support. What do the futures look like? This is the 2-hour futures chart. We do have a sizable bullish divergence, consecutive lower lows, consecutive higher lows on the RSI and on the PPO. If I look at the 4-hour chart, still double bottom, bullish divergence on the PPO, double bottom with a bullish divergence on the RSI, consecutive higher lows still. On the daily chart, we are again pennies away from tagging this major support line at 4,300 and completely filling this key gap. Now let's get into this chart. Now the difference between this daily chart and this daily chart, legends, is I've used the closing prices to connect a trend line. In this chart, I merely connect the shadows or the wicks to the absolute lows, and in this chart, I connect only the closing prices. And funnily enough, legends, they pretty much draw the same kind of trend line. This is the forecast that I'm expecting. So a slightly lower close in the next handful of trading sessions. I'm looking at Wednesday, Thursday, Friday, any one of these 3 trading sessions for a bottom to form and for a counter trend rally to begin as early as Friday and to end roughly Friday of next week at 440 or 439 to be exact, 439.9. Pay very close attention to this, legend. So we had a major sell-off, then we had a bit of a bear flag or a small bottom. Then we moved down and formed a lower low, okay? Now, this exact pattern is repeating. This precise pattern, exact pattern is repeating, and we can find it at major bottoms, right? Sell off, sell off, sell off, a small bottom, small rally, second low. That is the final bottom, and we have a counter trend rally. Then we come back down to form another major low that confirms a huge double bottom on the weekly chart, and that confirms the final bottom for the bear market in October of 2022. This is late September, this is mid-October. This is pretty much kind of what we're looking at, legends. A lower low now forming in the next 3 trading sessions, large counter trend rally, continuation of the sell-off, a lower low here at 418 versus 425 roughly, and that bottom being the low for the year this year. Okay, what else? Let's take a look at the June bottom, right? Same exact look, major waterfall style sell-off, small bottom here, lower low with a bullish divergence, confirms the bottom, and we see a rally. Exact same setup in May, waterfall style sell-off, we form a low here and a lower low, and then we get a counter trend rally. Again, legends, low, lower low, rally, low, lower low, rally, low, lower low, and a rally. What's been happening recently? Pretty much an identical setup, waterfall style sell-off, low, lower low. We're now waiting for that counter trend rally to take place. Let's take a look at the candlestick structure for a closer look. This is pretty much what it looks like right now. This is an identical setup. It's an identical setup. Pay very close attention to it, legends. Couple of red candles, one breakdown red candle. The low is an indecision candle. That is the final low. Several red candles, sideways moves. Lower low with a breakdown red candle. Indecision candle calls the bottom, okay? Kind of the same look here, legends. Sideways moves, breakdown red candle, that calls the bottom. What's been happening here? Sideways moves here, legends, with consecutive sideways candles. Breakdown red candle, we're now expecting one indecision candle and a bottom to form as early as today. What does the VIX look like? I covered the VIX in yesterday's intraday market update in the Discord community. By the way, legends, I share all of my trades, all of the trade setups that I'm watching, all of my investments in real time, as well as my daily live analysis. And I shared this key development intraday yesterday, and I said this before this high was developed. Actually, as soon as the market opened here, I said the VIX quite often tops with 3 drives to a final high. Okay, why do I say that? Well, because it's a pattern that we've seen repeatedly, right? High, slightly higher high, slightly higher high. That final third high is the top in the VIX. Again, you can see it here, legends. 3 highs this time, lower highs. The third one confirms the top. Again, legends, you can see it here in the April sell-off. High, 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 third high confirms the top in the VIX, and we get a sizable counter rally. In fact, let me add the S&P so you guys can see what that counter rally looked like. Take a look here, legends. That's a pretty sizable rally, pretty big rally, right? After the third high. Now let's take a look at the NYSE Summation Index, the McLaren Volume Summation Index for the New York Stock Exchange. And there are a few observations that I want to discuss, including the fact that the oscillator is now getting very close to tagging that major minus 90 level that we are waiting for. That will likely correspond with a bottom, as has happened back here in the March 13th bottom this year. It also corresponded with significant bottoms before counter trend rallies and significant bottoms again in major trend reversals. We're getting super close, likely just 2 trading sessions away from hitting that key level. NASDAQ Summation Index, pretty much the same look here. We are now at key support 13,100 is key support. I do expect the NASDAQ Composite to find buyers at this level. What about the 50-day breadth? This looks at the percent of stocks in the S&P 500 trading above their 50-day moving average. We are at 13.7%. So this is kind of horrendous. This is the March low. This is where the March low developed. It is almost where the October low developed, right? So we have to look for bottoms developing very soon. This is not a great time to go short the market. I know sentiment is extremely bearish, but most of the downside move has already happened. In fact, legends, this full measured move for the breakdown from this symmetrical triangle actually bottoms at 418. So even if you short here, you're looking at roughly $10 of additional downside to 418 by October. So wouldn't it be better to wait for the counter rally, then short at 440, 439, and back $20 of downside? That would be by far the most attractive risk reward setup. Not shorting in the hole, waiting for the counter rally, and shorting with the smart money, the big money that looks for strength to dump positions. We have to discuss the dollar index. The dollar index continues to show major signs of topping. This is a very clear ascending, bearish ascending wedge that's forming. Quite often, legends, as soon as these wedges break, we get a top in the dollar. As soon as the dollar breaks below the 20-day moving average, we get a major buy signal. Let's discuss fear and greed. We're almost at extreme fear, 26 to start the day. Almost certainly we're going to see extreme fear very soon. Let's take a look at the timeline. Look at that. That's when the March bottom happened. That's when the October bottom happened. The more disciplined approach is to wait for the counter rally if you're going to short, and then shorting at the end of the counter rally. Market momentum below the 125-day moving average. We often find support at this level or just slightly below it. Another indicator that the market will soon find buyers. Stock price strength still declining. Stock price breadth is almost certainly now getting very close to a bottom, as I showed you here, legends. We're pretty much at the March lows. We're almost at the September and an October lows. The final low will very likely look something like this, right? Higher low on the breadth, lower low on the S&P 500. That marked the bottom. The market rallied from that point on. Put to call ratio shooting up. Not really the best time to go short. Very often after these huge shots to the upside in the put to call ratio, the market actually bottoms, right? And this is now looking like a double top. What about economic events today? 8:30 a.m. before the market open, we'll get the durable goods orders month over month. Previous was down 5%. That's a big decline. So we'll see what happens. Two key things to watch. Those two things are, number one, we want to know whether the number will beat or miss. Number two, we need to know the reaction. If the number beats and the market reacts positively, it means we're back where good news is good news and bad news is bad news. If the number misses and the market still rallies, it means bad news is again good news, and that market is actually hoping the Fed will cut rates sooner than it's telling us. If the number misses and the stock market sells off, it means fears of a recession are now back at the forefront. And that's usually the time to rotate out of the stock market and into something that goes vertical. Just like this, when the stock market crashes, that's long-term treasuries. Now, usually legends treasuries don't really get a massive rally like this until the yield curve exits inversion, until the yield curve uninverts. The yield curve is trying to uninvert, but it's still in deep inversion. Very often when the 10-2 yield curve Exits inversion, that means that 10-year yield is now above the 2-year yield. That's very often when the market actually finally tops. That's when TLT begins its massive rally in anticipation of a massive recession. This rally usually lasts about 9 months or 3 quarters. I expect that rally to begin roughly in Q1 of next year. And I do expect that TLT is now in the bottoming phase. Long-term treasuries are now in the bottoming phase. And the PCE number before the market open Friday. This is likely when we will get that relief from the pain that we've been experiencing in the stock market over the last couple of weeks. Again, seasonality tells us last bit of September tends to be the worst. We tend to get a bottom in the last 3 trading sessions of September. We also tend to get a beautiful rally to end September and begin October, right? Usually a bottom at the last day of September, that means Friday, and a rally beginning in early October and ending by the end of the first week of October. Then a second dump and a final low by the 3rd to 4th weeks of October. That's when I expect that 418 level to be hit. Slap that like button on your way out. This is all I have for you today, legend. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow.